Markets have remained under pressure in recent weeks, and attempts of a rally this month have been ultimately short-lived. Even today, that's the case. Cautious investors wary of weaknesses in the market are looking for any chance of softening in equities and bond yields as more strategists see growing signs a correction could be coming. Let's bring in Scott Chronert, Citigroup equity strategist, to weigh in. Scott, it's great to see you. I mentioned even today this is happening, right? We had this huge NVIDIA-spurred rally in the shares of NVIDIA and in the NASDAQ, and now it seems to have faded. Are we seeing diminishing returns from this sort of AI enthusiasm?
So I think that's a fair question. The way I would characterize it is that we talk about shock effects to the market, both to the positive and to the negative. And I think the last quarter result and the influence that had on the broader semi and big seven was pretty impressive. And that was the more positive shock, if you will. Investors have had now time to process this. And so going forward, it becomes more company specific and becomes a little bit more incremental. And so I think we just have to have that perspective. I don't think the AI trend and the influence it can have on S&P 500 earnings longer term is at risk here. I think it's still an important part of the narrative going forward. But expectations, I think we just have to give them room to adjust as previous events have unfolded, and now we're looking at new incremental information.
Amid the AI hype phase right now, and you know, as we've kind of transitioned to the show me part of that phase too, you know, what are the defining characteristics of a growth name in that environment?
So it's a good question. So typically you go back over the years and looking at growth stocks, and you do need to see an ongoing positive trajectory and revision bias to the numbers. Okay, that usually is how you define growth, and that's how you define growth relative to economic sensitives or cyclicals. So you do need to see that. You need to keep feeding the machine, if you will, in terms of keeping valuations at bay, because fundamentals actually come in and support said valuations. So I think what we're in a interesting place right now more broadly around the AI construct, and that is that you're seeing many companies with very defined, like I said, revenue and earnings opportunities that they'll be measured against over the coming quarters. Other companies are putting forward their game plans around AI as well. And I think that you're going to see many of these companies get a hall pass in terms of delivering short term. But as we move into 2024, I think that's where game will really be on, and investors will expect much more of an ongoing positive revenue and earnings bias across the board for any of the AI-related plays.